Hey folks, and welcome to the Pipnotic Symposium for the 22nd of April 2020. Today is questions and answers, Q&A, so I'm just going to run through some of the questions that I've been receiving over the course of the past week since the last QA session, and answer those in as much detail as possible. So the first question is, when is the new Pipnotic currency strength histogram going to be released? And the answer to that question is probably within a week or so. Let me have a look. I'm thinking it'll probably be done before the end of next week, so before the weekend next week, maybe on the 1st. Okay, so that should be out, and I look forward to that. That'll be good. So I hope that's okay. So you guys will be ready to use it for next month. Okay, so that I promise. It'll all be accessible. You can start using it. Another question was, how do you combine supply and demand with currency strength? And while I feel we've been over this question many times, I just want to take the opportunity to cover it once again, because maybe my last explanations weren't very clear. So if we have a look at, let's have a look at a chart. Okay, so traditionally, currency strength is used to show you what is being bought and what is being sold. So if we look at the currency strength in this format here, so here we have, it doesn't matter, let's focus on the middle one. So this one here, we have the strong currencies, which are in the upper edge of this box, and we have the weak currencies in the lower edge of the box. So we can see we have the Australian dollar up here, which is the strongest at the moment. Then we have the Canadian dollar, which is just here, which is the lowest. Okay, then we have the yen here, which is slowly moving higher. So this is showing us where the flows currently are. And so if you look at this, I mean, the most intuitive approach would be to buy the Australian dollar and to sell the Canadian dollar. And while that sounds like a pretty logical methodology when using currency strength, there's a problem to that, and the problem is that, I mean, once a currency begins to pick up in strength and another one begins to move lower in strength, I mean, this gap between these guys here is essentially showing us like extreme readings. So by the time this becomes visible, or we could typically expect these two currencies to begin to converge once again. Okay, so we had this nice split, so we had currency strength divergence, we reached these extreme levels, okay, so here in the middle, and now we have currencies beginning to converge again. So we have a period of divergence starting from here, we have max expansion, and then we have convergence. Okay, so that's what we're seeing here. And so while buying the Australian dollar here would have been a really good idea, and selling the Canadian dollar, once it reaches extreme levels like this, we want to take a contrarian stance, and so you want to sell the overvalued currency and you want to buy the undervalued currency, because you're expecting these two currency pairs to move back in towards each other. And even during extreme market volatility, this is happening all the time. So if I show you a trade that the robot or the histogram got in this morning, this was the Australian dollar British pound. We were talking about this yesterday, or the day before yesterday, and we said, well, we actually spoke about this area here, just here. Okay, we thought this would be a pretty interesting area. Why? Because, well, price has kind of been rejected there once and twice and 3 times and 4 times and 5 times and 6 times. Okay, and so we can see that, I mean, every time price comes down to this area, we reject, 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 and so that tells us that we have something in here that is causing people to buy. Okay, so we looked at roughly this area here, and the robot, which is based on this software just here, bought just here at the low, just here at the almost the low. So let's see how many pips price went through it. So we went from here, it went against it about 40 pips. Okay, so price went down, went against it 40 pips, and now it's moving up nicely. So we go to a smaller time frame. Let's go to the 15-minute chart. You can see that it looks like this. Okay, so price went down, then it left. So we had this enormous push lower in the British pound. And if you look at the currency strength, I mean, why did this pair move down? Is it because the British pound was weak? It's not. The British pound, it is weak. Well, it is since the open of the session, but this is, which the open of the session is this line here. But you can see it's neutral to negative. What caused the pound Australian dollar to move lower was the Australian dollar strength, not the British pound weakness. Okay, which you can see here. You can see that we had a big push high. If we go on the small times, it's a little bit clearer. Let's just go here to the 4-hour chart. You can't really see it. You go here on the here you can see it. The 5-minute chart. You can see it very clearly. We had an enormous divergence in currency strength there. See, notice the pound is flat. The Australian dollar got very strong relative to the British pound. Okay, and so the robot said, "Whoa, we have mass expansion for this pair. Mass expansion measured via the histogram. So we have extreme readings. Note where this is. We have the green line. It's pretty close, isn't it? You see they're pretty close. On the 4-hour chart, there's a very nice overlap. At the point that this was all the way down here, the histogram was below this green line. And when that happened, the algo jumped in. Okay, so it jumped into that trade. It bought all the way down here. And now it's anticipating that this divergence in strength moves back together again. So we have the divergence, or actually we just have let me do this quickly. I wonder if I go like this. Okay, so if we look at this one here, so we have the Australian dollar strong, British pound, Canadian dollar pretty weak to negative, and our price pushed up very, very high. So we're expecting what? We're expecting at some stage, we're expecting this to do this. Okay, and so we had a really sharp spike down into our level. We saw immediate rejection, and now price is doing this. We might have another run towards the lows. We don't know, and then maybe a continuation higher, or we might have price accumulate, move down, accumulate on this area, which is that bigger area of demand, kind of sit on the area and then cut through it like so. But we don't know. All we can do is we can capitalize on the shorter term intraday volatility that we saw this morning. Okay, so that's what it's doing. And so, okay, that's the currency strength bit. What about the supply and demand bit? Well, notice that if we look at this particular pair here, so we had, let's mark off the lows. Mark off the lows. The lowest low is here, since this. Okay, so let's move over and have a look here. I'm just going to move to the half-an-hour chart just so we can look at the details, the nitty-gritty. You can see that we have this. Let me go like this, go like that. Okay, so now you can see that we have something that looks like this. Okay, so price, we came to this low, we moved up, moved sideways, we popped up, we moved sideways, slingshot was pulled back, and then we shot up north. And so notice that we actually have levels on top of levels here. So we have this, which is actually the demand. But then I'll ask you, is this the demand? Is this a parent or is this a child? This is actually a reaction to this. Okay, so the slingshot is here. I went down to here. Oops, wrong thing. The slingshot went down to here. Okay, so that's kind of like when we form this base, we left, sideways, left, sideways, left. So we actually have a couple of areas in here. We do have this one as well. It's going to remove. I can start from the bottom. Sorry, this is a bit unclear. So start from the bottom. This is the origin of the move. This candle closed above the highs of this area of accumulation. So I'm going to mark it off like that. So we have that one. Okay, price went down, and then I'm going to mark off the low of the pullback, which is here. sideways market. This closed above the highs of these. Price came back to here. Now let's see how close price came to these. Maybe not even close, maybe pretty close. Let's have a look. Where are we? Okay, so price came pretty close. So let's mark off the low and let's find out what price reacted to. So we'll go like that, and we go all the way back to where we were, and then we can see what it was. I think it looks like it reacted to the child. Yeah, so it reacted to the child. So it went to this little accumulation candle, and this is where it left from. So it actually reacted just here, the first one we drew. So we have this one here. We have a few levels. Remove that, we remove this one. We have this one here, and this candle here. This is kind of the basing area. This is the one that left kind of closed well above the rest of those, and so the low of that one is here. So then to the wicks, the lowest wick, which is around here. So if we remove that, just so we don't see all these levels on top of each other, we go like this. It's pretty close to where it went a little bit deeper. Okay, went a little bit deeper. Okay, and the cool thing is that, I mean, yes, we're on supply and demand, and we can spot these patterns on supply and demand, but doesn't it just feel a little bit better if we have extreme readings on the currency strength at the same time? So we have the same thing happening, but we have that happening here. Let me zoom out a bit. So we have the same thing happening here. So we have extreme push high, flat to neutral, neutral to slightly negative. We had that push high, and this was simply that push down into this area here, which we saw on the supply and demand chart next door. Okay, so that's pretty fascinating, I think. At least I think it's fascinating, and you'll find that the accuracy of these levels is remarkable. But the thing is, I mean, when this happened, was price. This is where this kind of stuff gets tricky. Let's say price is kind of, I mean, we'll just use this example here. This is perfect. Price came down sideways. We went up, we moved sideways, and then we left. This is like, I mean, the bottom fell out. I mean, who has the courage to buy down here? Who has the courage to buy down there in the face of a falling knife? Who's trying to catch a knife that's falling? I mean, it's a tough call. It's a really, really tough call, which is why software is so useful, because it's screaming at you what to do. I'm just going to put my template on. Okay, so let me reset this. Okay, so we have this happening. We have price approaching this micro demand of this area. This is a nice pattern. How you have a price moved up, sideways, and then departure. Okay, this kind of closed above these, so it's kind of, yeah, I mean, where the entry is pretty close to where that slingshot was. Okay, the lower this candle, this one closed above. It is a white candle, but nonetheless, and this is pretty close to where it was. And price fed a little bit deeper, but I mean, look what happened. I mean, that's frightening. I think most people would agree that buying in the face of falling price is frightening. But when you're doing it at a place where price is very, very likely to turn around, I mean, this gives confidence. Okay, you have also here we had high readings around here, this bit here. Let's try and find out where this one lines up. See, this bar just here lines up very nicely with this one here. So this one shows us the green bar. Okay, and this was an overbought territory. If we draw this line back, try and keep it flat, it looks like that. And this line just here, the red one, has actually moved down because of this. So this negative histogram has pulled this red line down. This would have been higher, which would probably bring it to the upper edge of the histogram. So maybe that the red line here, when price was back here, was probably up here, and I'm guessing it was pretty close to the highs. So it would have probably gone in maybe around here or here or here, but it didn't get in here. Okay, it got in at the tops, at the highs. And look how that worked out. Okay, so it's really, really fascinating how that works. And the good thing is, I mean, it lined up nicely, this one at least, with opposing area of supply or demand. And let's have a look at this one here and see what kind of that did. Let's mark off the high and then scroll back and see if there was anything that price was looking to feed into. Let's go to the daily so we can see it. Boom, boom. What was it doing? Yeah, I mean, it's nothing pretty. There's nothing pretty there. But what we can see, we had an area here of demand, and this is demand because it was respected, tested, tested, tested. Price went through it. This is the one that did it. I mean, look at that. That's exactly, I'll do that again. So we had this one here. Okay, tested, 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 removed, parent, child. So you put this up here. You go like this, and that's pretty close, isn't it? Super close. If you minus a few pips just to ensure you get into the trade, I mean, how is that for accuracy? I mean, the mind boggles. At least mine does when I see stuff like this, because it's fascinating how accurate it is. Okay, and this happened at an extreme reading. So the indicator here would have said get in. The indicator here would have said get in. The indicator here would have said and did say get in. And what happened here? What happened here? And what happened here? Okay, let's find another example. Before I go on, so that's how these things line up. And so, I mean, you're taking the histogram, you're enabling the alarm. So enable alarm for all symbols. Let's set this to true. See what happens. Does anything happen? No. It's run its course. So let's change this and put this to 1.8. Where do we have, next? Where do we have relatively high readings? So let's flick this on and see what happens. And these are the pairs that we've been looking at over the past few days. Nothing. Let's try again. And if, okay, 2.0 is a good reading. If I'm forcing myself to reduce this value so that I can find a trade, that is the equivalent of chasing trades, okay? The default settings in this software work beautifully, so I wouldn't fiddle with them too much. I wouldn't force it. Okay, we'll go down a little bit more just to try and find an example that works. Okay, we got one. What do we get? We got the pound Aussie. Okay, we got the pound Aussie. This is the one here. But notice, the trade already happened, so now we would actually get into the trade late. You know what I mean? So this is not an ideal place to begin to look to buy. We would wait for price to poke back in to this area of bullish liquidity, which is below this green line here, before we started to entertain the idea of buying again. Price is too high. Price has already moved. How far has price moved? We're currently here since our entry. We're already up 90 pips on this trade. Okay, I've already taken some of the trade off, actually, most of it. So I left a slither in to let that go. Okay, but it's remarkable how it works. Okay. I also got into a Euro Japanese yen trade yesterday based on the exact same information. Right here at the absolute lows, and I got out just here at the highs. Okay, so pretty fascinating, and let me just show that to you. Here it is, buy. We bought 5 micro lots. We got in at 116.32. Let's mark that off. 116. Okay, not the absolute lows, but that's close enough there. And we got out 116.91. That's about here-ish. Yeah, right there. So you got out just there. We got 60 pips out of that one there, and we got off at the child just here. Price poked up, we went really deep into here, so we actually, price went an additional 20 odd pips, poked up into here, and now it's moving down. Okay, and this is happening all the time. Are they all working? No, absolutely not. They're not all working, and that's okay. I mean, there was a trade on the Aussie US dollar, but that was a manual trade. There was a trade on the Aussie Kiwi. Let's get in here. And the trade was, let's see where we got in. We sold here, which was a little early, and we rode it up to here. But then we got into another trade after it was stopped out, and we got in here and we took it off here. Okay, so price went actually all the way down here, and we gave back 50% of that by waiting. And is this going to turn around? We don't know. All we can see is that we're high. We're high. What happened when we were at these levels to the other side of the market? Or what did happen? We went up, and so you see that we went down, went up, we went down, we went up, and now we're expecting maybe something to go like this. We don't know. The trade got in here. It went, to be exact, it went about 120 pips. We only got half of that because we waited. But when price reacted to this was during the night, so I didn't manage to do anything about this. Price kind of moved in, we found the base, and then we started to wriggle higher. Okay, so they don't always work. I mean, this one didn't work. We got in too early. We got in just here, but notice that the stop was pretty tight. The stop was only about a 70-80 pip stop on that one. Okay, and we don't know what's going to happen. We don't know what's going to happen. We have a look here on the daily chart. Notice that we were reacting at this area here for the second position. This is the entry level, which is gorgeous. See how like support becomes resistance. That was the area, the entry. The stop was above, and now we're starting to move away. Maybe we'll have a push up a little bit deeper, bit of currency strength divergence at the highs, and then continue moving low. We don't know. But there was a big enough reaction at that level for us to get out of the trade with a profit. Okay, good. So that's how we combine the currency strength histogram, or any of the currency strength indicators. The GFX can be used the same way, with the supply and demand. So let me put my template back on, 3FX. I think it's this one. Close enough. Okay, so we have this. We have this moving higher here. You can see pretty clear. We have the Canadian, which is weak. The Canadian that's weak. So what do we do in a situation like this? Let's just grab this. Let's have a look at the settings on this. What is this? This is 54-hour periods. Okay, so this is 54-hour periods. So when price does that, if we even zoom out a little and see if anything else has been around those levels. I mean, look at the American dollar. The American dollar was up there. It got very high. The Japanese yen got high. If we do an average of those three, we're probably maybe here. If we do an average of these, the Canadian, the pound, the Kiwi, maybe we'll do something like that. And the Aussie probably pushed it a little bit further down, maybe something like that. So here we have an average. And so here, you can see that, wow, we have a weak Canadian dollar. We have a strong, let's go like this. We have a strong, oops, wrong side. Strong yen. So let's have a look at the Canadian dollar, Japanese yen. Let's find that pair here. We're looking at 4-hour data. So we had, when did this happen? Actually, we have to put this on the 4-hour chart as well. We look at this. This happened the 9th of March at 12 o'clock. Where's the 9th of March at 12 o'clock? Here. So right here, around here, it was saying time to sell. Time to sell the Canadian dollar, Japanese yen. Okay, what happened? We really moved. Let's have a look at another example. Let's have a look at the, here we have the Swiss franc. What about the American dollar, Australian dollar? This is a trade that we were in, Australian dollar, American dollar. When does this happen? This happened, let's take the extreme, this happened at, on the 19th, again at 8 o'clock. So the 19th. Probably gonna have to zoom out a little bit more. Okay, here, it happened right here on this low candle. It said the Australian dollar is weak, the American dollar is strong. What do we do? Buy. I'm just going to use this tool. Buy somewhere in here. Lined up nicely with this. Right there. What happened? Boom. Serious turnaround. Okay. I mean, this happens over and over and over again. So using currency strength, traditionally, buying strength and selling weakness can be a little bit dangerous because you often find yourself getting into trades when moves are already done, which we want to avoid. Are there any more lines here? You can do it, and what you would typically do is that you would look for example, a crossover to occur. Let's see, we got a crossover around here. That's like a pretty decent crossover. Oops. Let me do another one. So we've got a crossover here. Okay, that's pretty late in the crossover. Let's say it happened there. And you go down to the smaller time frame, let's say the 15-minute chart, and then you start looking for buy opportunities. Because you know that we just had a positive crossover. You can see how we kind of turned around. You can see we started to turn positive. Then you get in at demand, okay? And so where do we have like some nice pushes away from areas that consumed other areas? Well, we have something here. We have this here. This is very rough, okay? Very rough. So here we have this. We move below these lows here. We move below this. And so we had something in here. Just tested. It was removed. What area did it? This one did it. So this one is gone, and now this one is gone. What area did it? This one did it. And so we have demand here. What does that mean? That means buy at demand. Price moved out of this. We came down. We came pretty close to it, and then we left and we started to move higher. And price really went higher. Okay, and so while you maybe wouldn't see this so clearly on the smaller time frames, we did in this example, but maybe you're not going to. But if you're focusing on this, you can see, well, the crossover has occurred, and you can see prices already started to move. It doesn't mean that it's too late. It just means that you need to get in on the smaller time frames. And this is how you would use currency strength in the traditional sense. Okay. So I hope that answers your question regarding how we combine currency strength and supply and demand. It's a remarkable tool. It's very, very powerful, and it's giving some incredible results. And so I encourage you to use it. And like I said, probably the 1st of next month, the 1st of May, this will be available to all members, and then we can all start using this remarkable tool together. So let me put this back on. Macro, good. So we have that now. Okay, I just want to have one more example here. We're going to use the scanner once more. And I mean, you don't have to do this on this time frame. You can also do it on the, let's say you want to look for shorter term entries. Okay, you want to go to shorter term entries, so you look for it's attached to this chart. So now we're going to try and get it to tell us where we have these extreme readings on the 15-minute chart. I don't do this very often, so let's see if it manages to return anything. Nothing there. And the good thing is, because the data is the same, it's looking at ratios, it's not looking at absolute values, it's looking at kind of normalized data. The modifier and the mean periods, they work on everything from the 1-minute chart to the monthly chart. Okay, and so you don't have to fiddle too much to get it to do something interesting. Let's try 1.5 just to see if we have anything. Yes, so we have the pound Singapore dollar. So let's disable this, the alarm. Let's move this over here and we go to the pound Singapore dollar. Pound Singapore dollar here. So this is a negative value and we're looking probably for it to move higher from here. Yeah, we've already actually been at these negative values. Notice that this green line and this red line have moved closer together. They've moved closer together since the histogram started to move to more positive territory. This green line and this red line would have been marked higher at around this price point here. So we probably would have gotten in close to the lows on this particular price push here, because we're looking at a moving window of currency strength data, and we're using that to measure extreme readings. Okay, and so we probably would have been able to get in on this trade at the extremes just here. Okay, let's try even on the 1-minute chart and see what happens. Let's see if we can use it there. So I'm just going to expand this. I'm going to switch this on, reset it. Let's turn it on and see if we get something here on 2. Yes, so we have the pound Japanese yen. Pound Japanese yen. Let's disable the alarm. Pound Japanese yen. Pound. Actually, I didn't even see if that was a positive or a negative number. Let's have a look. Let's put this on. It was a negative number. Okay, and so we probably would have been drawn or alerted of this trade. Now we've already started to move positive at around this price level. So when price was probably around here. So then we were being told that yes, we should potentially look to begin to buy. So what you do in a situation like that is you look for demand to be present. I'm going to zoom in a little bit more. And we had this parent child. Let's mark off the whole area. Okay, tested, removed. So we have, and price has already been back down to this area here. So this is a nice fresh one here. And we also have this one down here. Let's mark off the whole area. Again, very rough areas, but we have kind of the parent, the child, tested, the slingshot was pulled back. How close did we get to that? We didn't get to the parent, we went to the child. Okay, and so we're buying at demand at a price point where we can expect these currency strength readings to begin to converge towards one another. Beautiful, beautiful, beautiful. I think this is probably one of, rather obviously I think it is, but this is, at least in my experience, in my opinion, one of the most solid and powerful combinations of methodologies that I've ever seen in my almost 10 years of writing price action software and much fewer years trading. So it's very exciting. It's a very exciting methodology. It gives you tremendous risk reward, and I mean the entries are very precise because you can base them on currency strength. So you're getting at the extreme areas, but you're also doing so at areas of supply and demand. Let's have a look just to see how that pound Aussie trade is doing. See what it's doing. Yeah, so we got in here and now we're moving away from here. So let's see how far we are. We managed. We're up 100, about 100 pips on this trade so far. So a remarkable run. Again, where did this happen? This happened at extreme levels here, as you can see, and it's evolved very nicely. Okay, I'm not going to ramble on anymore. It's 35 minutes already, but if you have any questions, please leave them below the video or post them in the Discord channel, and I will catch you in the next video. Thanks for taking the time to watch the video.